Good morning, welcome to Inside India. I'm Dan Murphy, straight to your top stories today. First, India's Prime Minister Narendra Modi kicking off his Asia visit in Japan before heading to Tianjin for the SCO summit, his first visit to China in 7 years amid strained US ties. Plus, we are an hour away from the end of the US de minimis exemptions, dealing a big blow to small packages. And India's economy showing some signs of resilience as industrial output picks up to 4-month highs as we await quarterly GDP data due out later today. Great to have your company this hour. Welcome to Inside India. We have a busy show ahead. Let's kick it off as we always do with a live look at how Asia is trading today. And you can see here, well, the Asia markets kind of breaking ranks with what was a positive lead on Wall Street. Some major markets pulling lower here, including the Nikkei 225 in Japan. Investors there assessing some fresh economic data. The market down by just under 0.5% there. The Kospi also down by 0.2. The SET is underwater as we speak. In terms of what we're seeing moving to the upside, though, the Shanghai comp better by around 0.5%. The Hong Kong Hang Seng also advancing just under 1% as well. And of course, the India markets coming online in about 45 minutes time. Let's give you a live look at how Nifty futures are looking right here, right now as well, after what was a day of selling yesterday as we saw the US 50% tariff actually coming into effect here. So as it stands, it is likely that we will see the market move a little bit higher here when trading gets back underway. You can see futures at 24,676. Meanwhile, India's second quarter GDP data is due out later today. Analysts expect growth to slow to 6.7% from 7.4% in the previous quarter, dragged by weak urban demand and sluggish industrial output. Economists say subdued private investment could offset the boost from government spending and a strong monsoon. Also, looking ahead, India now faces the impact of those fresh US 50% tariffs, threatening key export sectors including textiles, footwear and chemicals. And ahead of the GDP data, India's industrial engine picking up steam in July, posting its fastest growth in 4 months. Output up 3.5% year on year. That was a beat on expectations of a 2.1% gain and up from 1.5% in June. Manufacturing leading the charge there with a 5.4% jump, while consumer durables like cars and phones surged 7.7%. Capital goods up 5%, signaling stronger investment activity too. And Prime Minister Modi will be looking to counter the tariff pressures through new partnerships in Asia as he kicks off his regional tour today. Modi will be visiting China to attend the Shanghai Cooperation Organization Summit, his first visit to the country after 7 years. More on that later on in the program. But Modi's first stop of this tour is Japan, where he is set to arrive very shortly. Our Kari Joji joins us live now from Tokyo to tell us what's on the agenda. And Kari, this is a really big juggling act for India's leader right now.
Absolutely, and for Japan as well. And I think when the two leaders meet later on tonight, the agenda is going to be very broad and there is a lot at stake. Japan and India have forged very friendly ties over the last decade in particular. You remember, I think many people remember the late Prime Minister Shinzo Abe making a trip to Modi's hometown of Gujarat with his wife many, many years ago. And although this is Modi's eighth visit to Japan, it comes at a very critical time, not only geopolitically, but economically as well. I think both sides want to find new partners, India in particular, as it has been engaged in this trade war with the US, and Japan as well, to try and carve out a security alliance that's deeper with India, particularly in the Indo-Pacific region, as China asserts itself in this area. I think so. There's a lot at stake here. Japan and India have had this partnership and alliance that is in on paper a security framework, but that hasn't been updated in 17 years. We could see a revision to that for the first time since 2008, and no one will be surprised if there are economic deals inked as well. There are key areas, for example, chip equipment, artificial artificial intelligence, defense, pharmaceutical, you name it, they're probably going to be on the table, and automobile as well. And even beyond that, I think at the grassroots level, they're going to probably discuss more back and forth between individuals, between Japan and India. In particular, Japan is interested in hiring more people that are not just in the IT business, but also in nursing, because this is a very quickly aging society and they do not have enough people to work with the elderly. So I think a lot is on the table and the stakes are pretty high for both of these leaders.
Carrie, do you think Modi risks a bigger fallout with Washington by leaning closer towards Xi and Putin during this next week?
Well, this is a delicate balancing act for sure, because the Trump administration has upended the norms, not only politically, but economically as well. I mean, it's a balancing act for both of these leaders. At the same time, Japan has an agreement that is not in paper yet, that seems to be delayed. So he risks as well stoking the ire of Washington if he's cozying up to partners that are at war with the U.S. So I think it's not only India, but Japan as well. And I think that when you drill it down, I think it falls into some key areas that are, politically sensitive, and the national security issues as far as chips and defense equipment are concerned. So I think it's not only Modi, I think it's Ishiba as well, particularly as it relates to the relationship with China.
Carrie, excellent work as always. We appreciate your reporting. Also wanted to bring our viewers across some breaking news here. We are just seeing some live pictures now out of Taiwan. The U.S. Senator Wicker, who is chair of the Senate Armed Services Committee, is on the ground in Taiwan. This is very significant, of course. We are hearing that the conversation there that Wicker has been having is around this idea that they are looking toward more important discussions around Taiwan. She has said, "We stand here to re-emphasize the partnership agreement that we have with Taiwan," and adds that she's delighted to be here to reinforce the great US-Taiwan partnership. Now, of course, the optics of this are very significant. We know that when senior US officials arrive on the ground in, senior US officials arrive on the ground in Taiwan, in Taipei rather, obviously this is being very closely watched. So we'll come back to this as soon as we can, and when we have more information on it, we'll be able to dig deeper into that for you. Meanwhile, Japan has also pledged a $68 billion investment into India's chips and AI sector. The country just launched an OSAT plant in Gujarat. I want you to listen to what the IT minister said about India's chip goals.
As part of the semiconductor mission, 10 projects have been approved. The construction of those approved in 2023-24 is progressing well. The pilot line of CG Power has begun today. This pilot line is an advanced one. Production of the first made-in-India chips will begin soon.
Okay, well, let's get more with our next guest. Pratnashree Basu is an associate fellow at Observer Research Foundation. She's been thinking deeply about these issues. She joins us live now. Pratnashree, first of all, I wanted to get your take on the week that was and the introduction of this 50% tariff. First of all, do you still think that a US-India deal is likely at this point, given the lack of communication that we've seen on both sides? Yes, the channel of communication is there, but it doesn't appear to be any momentum at this point to getting a deal done.
Absolutely. Thank you so much for having me, first of all. But regarding the deal, I don't think that there's any progress that we're going to see very soon. I do think that India would still want to work out a deal and is open to negotiating. But if we do not get the US to be on the same page as we are, then I think that a deal would be very unlikely. So going forward, at least in the near future, in the next few weeks, probably things would be as they are.
Okay, so what's your base case in terms of timing then, and what compromises are most likely here? Because it is likely that we will have to see progress on some kind of deal at some point. What is it going to look like?
That's very difficult to say at this point because the US has refused to budge on its position, and negotiations have been going on for quite a while. And it's very right now. I think there's a lot of uncertainty and a lack of significant degree of lack of clarity that's there regarding what the US actually wants. Because the reasons that it's been citing do not hold water. So I think let's see. It's still too soon to say, but what I know is that India would be open to negotiations to come to a deal. I'm not sure about whether the US is on the same page as of now. I do hope it will be in the coming months.
Okay, so of course we're looking at a very fragile US-India partnership right now. Talk to me about what's going to happen in Japan as well, because we've just seen Japan pledging this 10 trillion won investment plan here, one of its most ambitious ever for India. How much of a game changer is that for Modi, and what do you think it ultimately means for India's growth trajectory now if this meeting is going to be a success?
Right. Well, I think that before I go into that, it's very important to mention the strategic context of India-Japan ties. The two countries do share a special strategic and global partnership, which, as you know, Modi mentioned before leaving yesterday, is going to be given new wings through this visit. And India-Japan ties are bound not just by economics. They also share shared concerns over a stable and reliable Indo-Pacific framework and governance structure. So the partnership is actually multidimensional, and infrastructure component of the partnership has been a sort of a core area for many years, and added to that we now have cooperation in defense, in technology, clean energy, and even people-to-people ties. And I think that unlike India-US or India-China relations, India-Japan ties are very low on friction and very high on trust, which explains their sustained trajectory over decades. And Japan is one of India's largest investors. It is a leading partner in connectivity projects, has been so for decades, including particularly India's northeastern region. And the two countries also partner in third countries like Sri Lanka and Africa insofar as infrastructure and connectivity projects are concerned. Now, coming to the investment that is planned, I think that it signals a very long-term confidence in India's growth trajectory. Japan, I think, signals that it is betting on India as a manufacturing hub and a consumer market. The investment is also expected to flow into the digital economy, green energy, and advanced manufacturing spaces, all of which are sectors where India seeks global presence. And politically, I think that the investment underscores the fact that Japan does view India as a strategic partner in the Indo-Pacific, not just as an economic opportunity.
Indeed. Would you say Japan is now India's most reliable partner in Asia? You mentioned some of the economic agreements where we're seeing the investment flows, infrastructure, clean energy. This also includes technology, which is very significant on the Japanese side as well.
Absolutely, very true, and it's very interesting to see the partnership now, diversify into so many different sectors. And I think that there's a strong sense in both countries that a lot could be done together. And this is, I think, the foundation of this is the fact that there is a shared outlook towards the Indo-Pacific, which is driving growth and investment and interest in many other areas.
Talk to me about some of the economic security initiatives as well. The economic security initiative covering semiconductors, minerals, clean energy. How important is that going to be for India's supply chain build out into the future as well?
Oh, very important, because India has been very keen on diversifying supply chain resilience and entering into the semiconductor market for many years, more so very recently. And I think that Japan in that regard is a very important partner for India. India has also, I think, set up manufacturing plants as far as semiconductors are concerned, and it is trying to enter the chip building market. There are concerns and limitations that India still has in terms of capacity, but I think those issues are gradually being ironed out, and Japan would be a key partner in ironing out those issues and building deeper ties going forward.
And Pratnashri, let's also talk about the other major event that will take place, Modi heading to China after Tokyo as well. This is the first time that this will happen in some 7 years, in fact. How significant is that timing in the middle of this trade clash between the US and India, and as we see India perhaps looking to deepen its engagement into other markets in Asia, including, of course, Japan?
As you mentioned, it is a significant development. As you know, that post the 2020 Gulf War crisis, India-China ties had been paused for all intents and purposes. And although China had been very insistent on delinking our economic ties from the impasse that was there on the strategic front, India had been insistent for all those years following the Gulf War clash that we cannot delete the two. We cannot have a normalization on the economic aspects while the sensitivities were still very much there on the strategic front. But it was late last year, that normalization finally happened on the strategic context, and there was an agreement on both sides on how to move forward and iron out the issues that were there. There has been a degree of confidence building and trust, ensuring that trust is there from the Chinese side regarding the border issue, the border dispute. And that has been very important in moving forward with the economic aspect of India-China ties as well. So following from October last year, we've seen a degree of normalization happen in India-China ties. Visa restrictions, flights, and so on have also started resuming. So this visit at the SEO summit, I think, is a very important one. But I think that it should not be we should not read too much into it in the context of the US-China tensions that are going on. And because for India, diversification of our partnerships and maintaining that we do have choice in our foreign outreach is very important, and has been very important for the last over the last decade, and more so in recent years. So India's outreach, India's always sought to engage with different countries, China included. So it's not that because there are tensions between India and the US in the current moment that India is stepping up its ties with China. But of course, engagement will be continued since normalization has started.
It's a hard sell for the White House, though. If this is not Modi turning his back on the US president and trying to deepen engagement with China, then how else do you expect this to be interpreted in the White House?
Well, I think the White House can interpret it in the way that you just mentioned, and there's no way that we can stop the White House from doing so. But the US should also know that a lot of effort has been put in over the last several decades into the US-India partnership, and India is still holding strong on that front. India stepping up its engagement with China in no way indicates that India is turning its back on the US. And I think there's a lot of evidence that the US has to believe this. But if it chooses not to, then that's rather unfortunate.
I wanted to ask you about a few other specifics here. We've also just seen Foxconn pulling Chinese engineers from its India factory. Do you think that weakens India's position in these talks?
I'm not really sure about that. It does complicate things, but I'm not very sure whether it necessarily indicates that India would be on the back foot. As I said, that regarding the trade tensions and the negotiation, we still have to wait and see how things proceed.
Indeed. And when you look forward as well, when it comes to Make in India, which we know is a major initiative, for the economy, what matters more for the next decade? Is it going to be Japan, China, or the United States?
I think India would want all three countries to deepen ties with all three countries and to explore economic partnerships with all three. But of course, political realities would dictate to a great extent how that turns out, how that shapes up. India, as I mentioned earlier as well, is not looking to pick sides or pick countries. India does want to have as many options as possible and to boost ties in different sectors with different countries so that we can boost our leverage so that we can sort of pull in each other's strengths and leverage those to the best of all our capabilities. And I think that is going to continue to be India's approach going forward.
And how do you think Modi is going to play this domestically, politically moving forward as well? I think what we've seen over the last week is a real appreciation, at a national level at how Modi has attempted to push back at these US efforts to curb India's ambitions when it comes to buying Russian oil. Would you agree?
I would agree, and I think that there has been a strong support in how Modi has dealt with the U.S. Position and with Trump's comments, and because US has been doing business with Russia. It has recently, I think, over the last couple of days, we've had news on Russia stepping up its business ties with, the US stepping up its business ties with Russia. So it's rather hypocritical a position that the US has taken when it says that, they'll raise tariffs, and they actually did because India buys Russian oil. And I think that this pushback, the fact that India has held on to its position very strongly, is being viewed very favorably by the citizens.
Okay, we'll leave it there. Pratnashri Basu from Observer Research Foundation, really appreciate the conversation. Thanks so much for coming on today. Do stay with us here on the program. We have more news and updates right after this short break. You're watching Inside India. We're back in 2 minutes. Good Friday morning. Welcome back to the program. You're watching Inside India. Let's get you across some of the other stories that we are keeping tabs on today outside of India. First, hundreds of people marched on Wall Street overnight, campaigning for economic justice and advocating for diversity and inclusion. These took place concurrent to a union march in Washington, D.C., also on Thursday. More protests are expected to take place over the coming days for Labor Day weekend. Protests are also raging in Jakarta. Thousands of Indonesians taking to the streets, voicing anger at social inequality and what they call corrupt elites. This is the second night of demonstrations after a local media report highlighted parliamentary salaries and benefits. Police have tried to disperse the crowds using tear gas and water cannon. The Indonesian markets and the rupiah are down sharply. The Jakarta composite down nearly 2%, and the rupiah has been weakening around 1% to its lowest in nearly a month. And Pakistan is facing its worst flood in 40 years. Over 1 million people have been evacuated from the Punjab province as rivers overflowed, submerging villages and crops. Authorities breached river banks to prevent dam collapses. Residents wade through chest-deep water amid heavy monsoon rains and upstream releases from India. Officials say the immediate threat has been averted, but climate disasters are becoming the, quote, new normal. Up next on the program, Tianjin is the stage and Xi and Modi are in the spotlight at the SCO summit. Will this redefine India-China relations? We're going to discuss the dragon-elephant tango up next. Stay with us. Welcome back to the program. A quick look at how the crypto space is shaping up today. Bitcoin and Ether in focus here. Taking a look at the price action, you can see Bitcoin down by 0.5%, 1,641 right now. 111,637, I should say. My apologies. Ether also reversing that trend, up by around 0.5%, 4,486. Right now. We are counting down to the market open in India. Here's how we are shaping up as well. Nifty futures looking like this right now, and we are expecting the market to open just a little stronger off the back of what was a decline yesterday following the introduction of the US 50% tariff. Russian oil exports to India set to rise in September. That's despite Washington slapping New Delhi with 50% tariffs for those purchases. Reuters reports that India, which is already the biggest buyer of Russian crude, is boosting purchases by up to 300,000 barrels a day. The US calls it profiteering, but New Delhi points to the West, still buying billions of dollars in Russian goods. Questions are also being raised over why China, the biggest buyer of Russian oil, isn't facing similar sanctions. And this weekend, leaders of all three, India, China and Russia, will be under one roof. Prime Minister Modi and President Putin are expected to attend the SCO summit in Tianjin, hosted by President Xi. Our Elaine Yu will be there on the ground to cover it. She joins us live now with a preview of what to expect. Elaine, a lot of moving parts here.
That's right, and this is the biggest SCO meeting since the group was founded in 2011. So leaders from more than 20 countries will be attending. You mentioned Putin and Modi. This is Modi's first visit to China in 7 years, but also leaders from Belarus, Pakistan, Vietnam, Malaysia, Turkey and Iran will be there as well. So this is a significant meeting at a time when Trump's trade war with India, China, Southeast Asia has created all these new dynamics. But rather than definite outcomes or substantial agreements, analysts say this gathering is more about optics, this show of solidarity in Asia across parts of the global south and with Russia as well against the U.S.-led order. And if you bring in Russia, Moscow is also hoping for trilateral talks with China and India. And of course, the two countries are the biggest buyers of Russian oil, which has made at least India for now a target of the U.S.'s increasing tariffs. But the SCO also faces limitations and challenges. For example, internal frictions between India and Pakistan. But a key event we're watching is one on the sidelines, a meeting between Xi Jinping and Narendra Modi. So let's take a look at how the relationship between India and China has evolved in the last couple of years.
After a 5-year break, India and China are speaking again. The ice began to thaw with the Xi Jinping and Narendra Modi meeting in October last year. And since then, senior leaders of the neighboring countries have met multiple times. Indian defense and foreign ministers have visited China, while China's foreign minister has returned the visit in recent weeks. Relations hit rock bottom in 2020 after a military clash on the Himalayan border resulted in casualties on both sides. Flights and visas were suspended for years. But efforts are being made to reopen some channels.
Both India and China realized a couple of years ago that this 5-year, face-off that they had with tens of thousands of troops deployed on the border just wasn't sustainable, militarily, economically, diplomatically.
Still, old fault lines remain: trade, Tibet, borders, and regional security, especially given China's close ties and India's strained relationship with Pakistan. And alongside this, a lopsided economic relationship. India has a $99 billion trade deficit with China, but alarm bells haven't been sounded publicly. That's because Made in India still depends on Made in China. From iPhone components to pharmaceutical ingredients that help reinforce India's status as the pharmacy of the world, China is crucial for India's economy. However, the contradictions run deep. India wants Chinese investment and technology transfers, but China won't easily compromise its manufacturing edge. Beijing is seeking unity with India to promote its multilateral vision and challenge the U.S.-led order, while New Delhi is guarding its strategic autonomy. Meanwhile, India, like China, is increasingly at odds with the Trump administration, a casualty of U.S. negotiations with Russia over the war in Ukraine, and a target of additional tariffs.
Both sides have a vested interest in restoring normalcy. Both sides now have complex relationships with the United States. That was not the case last year when India's relationship with Trump before he came back into power was very, very solid.
The reset between the world's two most populous countries is still fragile. In what Xi Jinping has described as a dragon-elephant tango, these small steps come with big stakes.
So it is a complicated tango, and as we see a tactical easing of tensions between the two countries, we might start to see some people-to-people exchanges being resumed, flights and visas. But analysts say those are the low-hanging fruits, and the countries are still looking at a longer list of complex and deeply entrenched challenges, from the Pakistan issue to the unresolved border dispute. Dan?
Indeed. Elaine, okay, appreciate your reporting. Thanks so much for coming on today. Thank you. For more, we turn now to Yang Wang. He is the Chief Emerging Market and China Strategist at Alpine Macro. Yang, first of all, just walk me through your expectations coming into this really closely watched summit, the Dragon Elephant Tango. What's your take on what we can expect?
Well, clearly at this moment, both China and India have a common goal, which is to improve relationship in this kind of confrontation with the U.S. So it's quite likely the two countries will show goodwill to each other and try to improve ties that, as you just mentioned, has been strained for quite a few years. So there are a lot of common grounds that both countries can have some concessions to each other and to improve relationship from here. So clearly for both countries, I think that's a good opportunity. I think on the China side, China, we know that U.S. and China are in this kind of very severe strategic competition. So China needs as many countries as possible in its orbit. And then India at this moment is facing this kind of intense tariff war with the U.S. So India also wants to gain some kind of strategic leverage in dealing with the U.S. So I think that's why I think likely two countries will reach at least some kind of framework agreement.
So in that case, do you think the optics here are as much political as they are economic? And expand on that for me. You mentioned that we are likely to see a framework agreement. What is going to be inside and what will it look like?
Well, I think we now are beginning to hear some proposals, right? So, they are beginning to expand border trade across the border. So a few years ago, the two countries were in a war in the border. Now they are trying to promote trade around the border region, and also they are easing visa restrictions, and also we know India has a lot of restrictions over Chinese investments. So I think these kind of things will probably be dealt with. And on the China side, what China can offer, China runs a massive trade surplus with the US, with India. So China can promise to purchase products made in India. So you have this kind of to some degree, these two countries can improve their economic ties without actually breaking into the harder part of the two countries' relationship, which is runs in deep in the historic confrontation the two countries had. So I think at this moment there is this kind of willingness on both sides, both economically and geopolitically, to improve ties. So I think we should have some kind of low-hanging fruits for both countries to pick.
So here's what worries me the most about this scenario right now. We're coming into this really critical meeting. We are going to have India, China and Russia under the same roof at the weekend. How do you think this is going to be perceived and interpreted at the White House, with President Donald Trump watching on, seeing this tri-alliance take place?
Right. Yeah. So no, I don't think this will be perceived very well by the White House. President Trump has said, BRIC organization is almost like openly anti-U.S. organization, right? So if the three leaders are signing some kind of agreement, then I think the relationship between the U.S. and India will probably deteriorate even more. And I think that's really worrying, especially on the U.S. side, on the India side, because we know the U.S. and China, this tension runs very deep. It's a very fundamental conflict between these two countries. But India has had a very solid relationship with the U.S., but until recently, two countries were still very friendly to each other. But now I think the relationship has really soured quite a bit. So I think on the U.S. and India side, India will probably suffer economically from its decision to get closer to BRIC countries.
Indeed. The other issue here is the fact that we still have China and Russia, India and China continuing to buy Russian oil. How much of a concern is that for the US? Obviously, it has been the catalyst for this 50% tariff on India. But with regards to what we're seeing unfold right now, it's also pretty clear that that's unlikely to change anytime soon as well. Do you think that is also going to remain a major concern for this White House?
It is a major concern in the sense that the U.S. clearly wants to put maximum pressure on Russia. So if U.S. is able to force India to give up purchasing oil from Russia, then it's putting additional pressure on Putin. So from that point of view, I think this is a pretty important step for President Trump to follow through. But on the other hand, we know the trade relationship between the U.S. and India has not been in favor of the U.S. from President Trump's perspective, right? So India runs a very large surplus with the U.S. and also India has a lot of pretty high trade barriers against foreign goods. They have a lot of kind of even non-trade barriers against U.S. products. So I think that's why the U.S. has been pretty frustrated in trying to really break into the Indian market. So I think that's why the trade relationship between the U.S. and India is more than just India buying oil from Russia. There's a lot of issues of Indian not buying enough, let's say, American farm products. So I think there is a lot of real tensions in the trade relationship between the U.S. and India.
Not just between the US and India, but also between India and Pakistan as well. And I want your take on this too, because Modi is also walking a fine line, a careful balancing act here. Do you think he's sending mixed signals by engaging Beijing when we have these broader tensions and this long-running dispute with Pakistan still well underway? Right.
Yeah, so absolutely. I think India has had this very hostile relationship with Pakistan for a long, long time. So I don't think that's very new. The new change is, they had just had they had a war, very quick war. And after the war, the relationship between President Trump and Premier Modi, the personal relationship also deteriorated. So I think that adds the tension between these two countries and making whether the U.S. and India can really solve the trade conflict even less predictable. If we have this personal dispute gets involved, then really how the two countries will negotiate it become even less predictable.
I want to talk to you as well about how to trade all of this too, because obviously you're looking at this through a global macro lens as we see all of these negotiations take place. Take me inside the strategy right now as well. You're recommending staying underweight Indian equities, going long on bonds. Why bonds over equities in this environment?
Okay, first of all, I think really if the 50% tariffs on Indian exports to the U.S. Stays, then it's going to be a deflationary shock for India. So, all of a sudden, 20% of Indian exports will face such a heavy tariff. I think that will be, on the growth side, clearly it's a deflationary shock. So if it's a deflationary shock, then by definition, it's good news for bonds. And Indian inflation is already at very low level by Indian standard. It's below 2%. So real bond yield is quite attractive from that point of view. And if we have some kind of deflation shock from tariffs, then will make the bond even more attractive. And on the stock side, Indian stocks are very expensive. Indian stocks are probably among the most expensive markets in the world. It's probably on par to the US. But India does not have the superior profitability that US companies have. So I do not see the very high valuation that Indian stocks have is justified. So, and one of the reasons why global investors were willing to pay very high multiples, very high premium for Indian stocks was because they had, India was perceived as indispensable part of the U.S. strategy of diversifying supply chains from China, right? India was the hotbed of friendshoring, nearshoring. They had a lot of portfolio inflow, FDI inflows. So I think that really bid up Indian companies' multiples. But if that tailwind, if that geopolitical tailwind is no longer valid because of the trade war, then I think it will be very difficult for investors to justify such a high valuation multiples for Indian equities. So I think over the long run, India still.
Are you suggesting that Indian markets are perhaps overdue for a correction given current valuations?
Absolutely, yeah, and I think at least Indian market will underperform the rest of the year.
What is that correction going to look like? How much further do markets need to fall to reach fair value in your view?
Yeah, so that's an interesting question because we know once the momentum gets going, then typically the market can go from mean reversion to undershoot. So I think the downside can be pretty substantial if indeed the trade tension with the U.S. continues to escalate. Because now we know that the tariffs on Indian goods, there's a lot of exemptions. Electronics, pharmaceutical goods are exempt from the 50% tariffs. So if these exemptions are being removed, and the worst case could be if there's trade tension on Indian exports of services. So if that is being targeted by the U.S. administration, then I think the outlook for Indian equity market will be a lot more challenging than what even I currently anticipate.
Do you expect any deals to be signed while Modi is on the ground there that could possibly change the investment narrative for India?
I doubt that. You mean sign a deal with China? I doubt that will change the situation significantly, because if you really think about it, Indian economy and Chinese economy, they are not really complementary to each other. We can understand China buys a lot of products from countries like all the other BRIC countries, Brazil, Russia, and South Africa, because these countries, their main products and main export products are commodities, which China really needs. But in India's case, India does not really export any raw material, right? So India basically exports low value added manufactured goods. So China does not really need that. China needs commodities or high-end capital goods, which India does not really produce. So that's why I do not see India and China, their economic relationship are complementary to each other. They are more like they're more competitors than suppliers and buyers. So I don't really believe the trade deal between the U.S. and China and between China and India will fundamentally change the growth outlook of India.
One of the other things we're looking out for is the potential to see BYD come to India. If that happens, what would it mean for India's automotive sector?
Clearly, that would be positive, right? So, deals like that, I think, can happen simply because, we know two countries, two leaders are under the same roof, then they want to show some progress. And so I think very likely we're going to see some kind of deals. We're going to see some investment deals and purchases deals. But again, from a macro point of view, how much that's impact that will have on the structural outlook, I doubt that will be very significant. For the auto market, I think India should welcome Chinese car manufacturers to India because Chinese cars are a lot cheaper than Western brands or Japanese, even Korean brands. So if Chinese cars are low enough, can really generate demand. It creates a market for its own. So that's why I do think there are opportunities, growth opportunities. But again, from a strategic point of view, from investment strategy point of view, whether that can impact macro outlook, I doubt those deals can have important long-lasting impact.
And just finally, the rupee is already Asia's worst performing currency this year. Is that going to change anytime soon?
Rupee, well, I think, again, it depends a lot on whether the tariffs on Indian goods, U.S. tariffs on Indian goods will stay. If it does stay, then I think rupee has to depreciate to absorb deflationary shock, right? So, they have to, I doubt Indian exporters will be able to shift all the tariffs to the American buyers. So I think currency depreciation would have to be part of the coping mechanism to deal with this deflationary shock from tariffs. So at this moment, I do not think Indian rupee will appreciate. I think likely that we should see more downside from here.
Okay, watching closely. Jan, I really enjoyed the conversation. Thanks so much for coming on today. Jan Wang there from Alpine Macro. We'll speak again soon. And India markets have just joined the trading day. We're going to be looking at some movers in Mumbai on the other side of this break. Stay with us. Inside India back in 2 minutes. Welcome back. Straight to the wall. You can see here the Nifty 50 is in play for the Friday session, advancing 0.16% right now. 24,542 is the level. The benchmark's off to, I guess you could say, a pretty muted start for the Friday session. We've seen 2 consecutive days of losses for the Nifty 50 as we see the implementation of these US tariffs and on India goods coming in place this week. 50% is the level, as you know, clearly a concern for India's growth outlook and corporate earnings as well. We've seen 12 of the 16 major sectors actually moving to losses at the open, but the market seems to be holding just above the flat line there. The rupee at 87.71 right now. We're watching for Reliance's annual general meeting today. It is India's largest company by market cap. Investors will be tuning in for any word on the Jio IPO that was delayed from this year to the next. Also in focus, new partnerships, plus updates on the company's green hydrogen projects and Russian oil purchases. You can see the stock last traded up 0.7%. Speaking of IPOs, the Indian stockbroking platform Grow has cleared a key hurdle for its market debut. Reuters reporting the company has received regulatory approval for its public offer. Grow was last valued at $7 billion and is targeting as much as $9 billion when it lists in late 2025. The Tiger Global-backed broker competes with Zerodha and is tapping India's booming IPO market, the world's second largest this year. And shares of India's national aluminium company, or NALCO, looking like this right now. You can see up by 0.2%. The firm recently announced plans to invest around $3 billion in a new smelter and coal power plant over the next 5 years. The smelter is expected to be set up in the eastern state of Odisha. And that wraps up this edition of Inside India. Thanks so much for your company today and this week. I'm Dan Murphy. Stay with us here on CNBC. Access Middle East is coming up next.